Well, historically, Mike, the IMF is always a little bit more pessimistic than what happens. And the numbers that we're seeing with the China economic recovery, if they can translate to the West over time, they're going to be much better than expected. Take a look at the import-export data that came in today, much better than expected. Imports were down in China negative 6.6% versus negative 13.9 for the exports. Imports were down negative 0.9% versus negative 9% estimate. That's a huge spread of actualization versus the estimate, so much better than expected. And if you look at the businesses that are reopening in China, so for instance, you have Disney that's slowly reopening their park in Shanghai. Then you have Apple, and I don't know if you saw the numbers today, but their handset sales in China from February to March are up 241%, and year on year they're only down just over 20%. So that's a huge improvement over expectations. Then you look at Yum China has opened up 95% of their stores. That's Taco Bell and Pizza Hut. And Starbucks, who had to close down all of their stores in February, had negative 90% comps. As of the last week of March, they're back to negative 42%, and the company expects full restoration within a quarter to two. So businesses are coming back quickly in China, and you're seeing it in the travel data. So TomTom is a GPS tracking service. They're showing that the rush hour traffic in the big cities in China is back to pre-pandemic levels. The domestic airline flying is now at the trough was 4 million seats in February, was 8 million seats last month, and the peak pre-pandemic was 14.7 million seats in the air. So a lot of things are recovering much faster than expected. If you look at China's employment, according to Bloomberg, is now at 90 to 95% of pre-pandemic levels. This is just a few months later. And also we see it in the oil numbers. So their oil demand in China was below 10 million barrels a day in February. It's expected in April to be 12 million barrels a day, relative to the 2009 peak of 13.7 million barrels a day. So there are a lot of reasons to be optimistic. If we can control the case curve in the West the way that has happened in China.
Well, I'm glad you bring that up, because let me ask you about that, because you're watching what's happening in China. It's much more methodical than what you might imagine would happen here in the United States. These restaurants that you were talking about reopening, social distancing still in place, limited amount of people coming in there. People have an app to show whether they're in good health or not. You're also seeing temperatures being taken. You think about the United States and of course, the president itching to get the economy going again. But we don't really see those kind of methods going into play. How difficult is it going to be able to translate that here in the U.S., given this kind of cautious approach in China, whereas kind of a headlong approach is what you might see in the United States?
You bet. Well, let's take a look at the epicenter. So in China, Wuhan was the epicenter. In the United States, it's been New York City. And even without having the very stiff measures that you saw in China, people are staying home. They are abiding by social distancing. We're doing this interview through Skype. It's case in point. But the key, again, is the numbers, Mike. And we're seeing the apex of cases in New York City 2 to 3 to 4 weeks ahead of what the estimates were. So, again, we're just seeing this pattern of results coming in slightly better than expected. We can understand the natural pessimism. If you look at the U.S. economy, there are different Wall Street banks calling for 20 to 30% contractions in GDP for Q2. If you look at that economic contraction of $2 trillion is one thing, but let's take a look at the stimulus and liquidity that's been provided by policymakers, which is now amounting to more than $8 trillion between the U.S. Treasury and the Federal Reserve. That's $8 trillion of asphalt to fill in a $2 trillion pothole. So once we get the health under control, Mike, that stimulus in the back half of the year and the first half of next year can really lead to growth and global growth like we're seeing the recovery in China as well.
Quickly, if you can, how long do you think before we start to see us turn the corner on this?
Economically or stock market?
Yeah.
Well, economically is going to lag the stock market. So just as we crashed in the stock market 35%, anticipating the bad news that we're seeing today in the economy, the stock market's going to recover before the economy, and the economy is usually going to work on a lagged effect. 9 months, 12 months, things should start to be humming along because of all that excess policy and excess stimulus that's going to be in the system ahead of time versus in the last financial crisis, they tried to piece it back after everything was broken. Here, the trampoline is down to cushion the blow, and we can bounce back, particularly as we see treatments and vaccines on the health side will go a long way to speeding that up.
All right, Thomas Hayes joining us from New York. Thanks.